Hello everyone, and I hope you're excited. I'm excited. It's my first video of the year. It's our first video of the year. Well, I've arrived at the office after driving on the roads, and I had to quickly push the button. Actually, I spoke to Siri and requested the latest news headlines because there was no one on the roads. Where is everyone? It was about the same amount of traffic as the sort of deepest point of the last lockdowns we had. So something's going on there. Obviously, everyone else is on an extended holiday, apart from us. And also, I guess it might have something to do with the cases because, the cases are going to go down because the testing is going to go down. So we'll quickly do Australia's COVID situation. Then we're going to do global markets and some latest economic data. But just the Australian COVID situation. Every day, the percentage of people being tested that are positive is going up. First of all, it was a startling 10%, then it was 12.5%. Even when we dropped to 18,000 cases, it actually went up to 12.5% of those tested had tested positive. And in the latest data, it was a whopping 22%. Something like that, 22.5%. 22.5% is nearly 1 in 4 people in the PCR test queues that went for hours around the nation, or particularly New South Wales, Victoria, but New South Wales, these numbers are for. 1 in 4 in the queues had COVID. So I imagine more people in the queue who tested negative for COVID actually picked it up in the queue. And should probably go, if you're PCR queuing, you should probably go for another test. So that's how bad it is. So if you have 1 in 4 people being tested have COVID, if you're getting onto public transport or into a taxi even, but certainly if you're getting onto a train carriage or a bus, have that mask on rather tightly because it's probably a cabin full of COVID floating around. That's how bad it is in Sydney. That's where we've got ourselves. Fortunately, it's not so severe, and hopefully we can get through this with a rapid build to herd immunity, which would be wonderful. And as that Oxford University chap said right at the very beginning of the vaccination process, herd immunity by vaccination is a myth. And I said that many months ago, but vaccinations are a huge, massive help. And they probably have given us that window of opportunity to avoid natural herd immunity without too big a sacrifice. So touch wood, that remains the case. So plenty of light at the end of the tunnel, but the storm clouds are gathering. And I always know what a market's going to do by the state of the sky and the weather, of course. So I would suggest be very cautious on equities, given all those dark clouds on the horizon. They mostly consist of over-enthusiasm by people. Basically, you just buy because that's how you get rich, and nothing will ever stop this market. That's a reason to be cautious of itself. The other thing is the Great Depression, for instance, and I'm not saying we're going to have a Great Depression, but the Great Depression, for instance, manufacturing, industrial production, all slowed significantly around the world, months and months and months ahead of a still accelerating stock market before it crashed. We've got exactly the same thing happening now. Manufacturing is slowing around the world. Mexico's in manufacturing contraction. So I think there's still some elements there of risk and warning signs. Overall, though, the market action, gold had a big down day, currencies had a big down day. My central theme is still buy gold long term, but it's going to be volatile, and sell Australia, sell the Australian dollar, sell the Australian stock market. We've been getting it right on that for many months now. Both of them have been falling for nearly 4 months, maybe longer for the Australian dollar, and we've been bearish the whole way down. I have, certainly, aggressively so, saying so on national television, etc. So I do think that's still a theme. It hasn't run its course yet. It's still further to go. Australian stock market weakness, Australian dollar weakness. Now, a lot of the activity in the last 24 hours was a bit of a US dollar party, to be honest. The US dollar had an extremely good day. But I think as the United States is now into daily cases that exceeded the all-time previous peak, It doesn't matter if the illness is going to be more mild. Vaccinations are going to reduce hospitalizations. With such large numbers, the hospitalizations are still going to be at concerning levels, and hence some caution about the economy is appropriate. And coming back to what I just experienced driving into work this morning, which is no one else is in a hurry to get back from the holidays. So I'm sure some people are, good on you. But there is an economic crunch happening. And if you think, ignore the economic crunches that are only temporary, but people have been saying that for 2 years now, and we've had temporary economic crunches. Excuse me. One of the reasons we had such strong economic data in Australia for a brief period of time, really, and we certainly have more people employed, is that there aren't any people coming in to do the jobs that used to come in, and that's why unemployment for Australians is very low. But the other thing is Australia, I've got to check these numbers, but I'm almost 100% sure that Australia had the highest per capita stimulus measures in the world. So why wouldn't you have a lot of consumer behavior, etc., renovations, all those various stimulus tools that the government used, and record low crisis low interest rates as we get a strong economic rebound? That's perfect central banking. Yes, I'm being sarcastic. The Reserve Bank of Australia has a lot to answer for, and it will have a lot more to answer for in the years ahead when we have this roller coaster economy caused by raising rates too late. Anyway, you've heard all that from me before, but it is really a worry, the caliber of the central bankers in this country. And it's not just me saying so, but I tend to say so a little more loudly than other people because I'm trying to wake people up, because we're not going to have a strong, stable economic growth path going forward if we have an incompetent central bank. And we do have an incompetent central bank. The OECD review said Australia needs to urgently review its Reserve Bank of Australia charter and review the status of the board. That's pretty strong language from the OECD. We're the only ones they said it about. That's how badly our central bank performs. And yet many in our media just want to go, it's the central bank, they're special. No, they're wrong nearly all the time. Anyway, coming back to markets, this is what I think is happening. Please note that I've been sort of saying it's a top. The only thing that really isn't still toppish is the US 500 index. So it made a new high, but it's sort of gone sideways the last 2 weeks. The Australian market's still very heavy. It's been going down for several months. So we got that right. The NASDAQ and the Dow Jones, they don't look as bullish as the US 500 index. So when you're talking about US equities, really we're still in a potentially topping out phase in the NASDAQ and the Dow Jones. And we have to respect the US 500 made a new high, but low volumes on the last 24 hours, and I'm not sure that's going to be sustainable. The whole world, and the point I tried to make before, but I ran off on a tangent, which is very unusual for me. The point I was trying to make before is driving in when there was literally no traffic. I thought something had happened I didn't know about and everyone had run for the hills or something. But there is an economic slowdown and it will impact businesses. I mean, there's already been a tragic impact on small and medium-sized businesses and their owners, managers, workers, and all of their families out of the last 6 months of lockdowns, etc. And now we have, I think, and this might be the most important part of today's sort of chat to you, first one for the year, is that we're going to have voluntary semi-lockdown behavior from everyone. Almost everyone is going to think, well, you know what, I'm going to work from home and that way I'm less likely to get it or bring it into my family. And then I can still go shopping, but I'll go shopping less often. I can still go to hospitality, but only for special occasions and rarely. And talk to any restaurant owner. The cancellations of bookings is extreme, never before seen. And that's voluntary economic lockdown behavior, which I think is going to be with us for 1, 2, maybe even 3 months, but certainly 1 to 2 months. So Australia's economic growth path, as I've always argued, will be below trend. The central bank will be behind the curve. This is true of the United States as well. In Europe, they seem to be more aware of their issues and fronting up to them, but they still have similar issues. China is slowing permanently to a still very impressive rate of growth, but it's an impressive rate of growth that is well down on what it used to be. So I just noticed the big looping light behind me. That's my halo. It slipped off to the side. I'll work on my construction of the video better tomorrow. Anyway, I'll finish up there. I have tried to be funny, tell a few dad jokes. That's who I am. But I do try to get it right for us, and we do try to say it first. And I'm not trying to be negative. I'm just trying to warn you of what could happen, which is equity markets will top out in the first week of 2022 and spend much of the rest of the year heading south. The US dollar is going to remain firm as a safe haven process. Gold will eventually become more favorable and again rally after this initial US dollar bounce sell-off triggered in gold. It will rally, but the Australian dollar, my outlook hasn't changed. At 77.45, I said it's going to 70 cents. We've done that at 70 cents. I said we're going to 65 cents this year. Still think that with risk to 58 cents, perhaps late this year, as early as that, but perhaps in 2023, or perhaps not happening at all. But we need to understand the risk for the Australian dollar is much lower. Sell Australia. How can you buy a nation that is a small, bottom of the world trading nation, fabulously resource rich, but very much a trading nation in a world where global economic activity is slowing, where global trade is highly disrupted, where the Chinese economy is permanently slowing down, and where the Chinese construction industry is definitely slowing down to an even greater degree. That is not a wonderful outlook for our mineral exports. Certainly our agricultural exports should stay reasonably strong, but again, there is a problem with actually getting our produce to market. So I'm not sure why we're all so enthusiastic and think we're invincible in Australia. I think we have some serious structural problems. We have to be globally competitive in a way that we simply are not at the moment. I mean, we should have the world's most efficient ports, but our ports are actually inefficient compared relatively to the rest of the world. We've really dropped the ball in Australia because we're so confident and sure of ourselves. We've allowed our productivity to slip way down the world ladder. We can't even be efficient at world's best practice with our ports because we're just not keeping up. We keep looking at ourselves and comparing ourselves to our past behavior. This happens in regulation, it happens in the tax system. What we have to do is look outward, realize, and I mean, it's been a globally competitive world for 20 years. You'd think we would figure it out. We have to look outward and we have to see what is world's best practice, and we have to get ahead of that curve. And then this small by population, resource-rich, agriculture, minerals, etc., nation, naturally beautiful, very lucky to be here, but we have to work harder at being world's best practice and not tinker with the systems we already have, but throw them out the window, start again with a clean sheet of paper and have world's best practice in everything we do. There's my little pep talk for the year. I hope, and why not, even with everything that's going on, that you personally and in your business, there's a fair bit of adaptation there going to have to be required, but at least personally, why not have the best year of your life? That's what I wish for all our viewers and readers. And we will get into the swing of things in a day or two with the usual reports. Thank you very much for listening into this slightly longer than usual report, but I hope it has helped you, and all the best. Thank you.